Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. If you like our content, please don't forget to hit the like button. Also subscribe to our channel, click on the bell button and choose all notifications for you to receive important financial updates at the earliest. In this video, we will be talking about 5 mid-cap stocks from Mohnish Pabrai's Indian portfolio for the year 2018. Now, for those of you who do not know Mohnish Pabrai, he is one of the most successful fund managers in the world and has investments not only in India but across the globe. Please watch this video to know more. Now, the first stock on the list is Rain Industries Limited, which is available at 241.25 and the face value for this stock is 2. The symbol for it is RAIN. Now, Rain Industries Limited is an India-based company which is engaged in the business of manufacture and sale of carbon products, chemicals and cement. The company operates primarily through 3 segments, which are carbon products, chemicals and cement. Now, the 1-year chart would reveal that this company was on a slow uptrend for the initial part of the year. Then when news of Dolly Khanda's entry into the stock came out, the stock literally went on a huge spike. After that, however, the stock had been consolidating and recently there has been a savage fall in this particular stock. The market cap of the company is 8,114.34 crores, which means that the company is a mid-cap one. The EPS is 25.94, translating into a very cheap price to earnings ratio of 9.30, which is much below the industry PE of 39.37. The book value is 117.2653, which translates into a price to book ratio of 2.0573. Now, this again is reasonable. The company has a dividend yield of 0.41%, whereas the promoter holding is on the lower side at 41.10. The 52-week high for the company is 475, whereas the 52-week low for the company stands at 91.55. Now friends, this company had turned out to be one of the best performers over the last few years, primarily due to some companies in China shutting down over environmental concerns. However, what has recently happened is that a lot of new factories are coming up in China which are equipped to handle those environmental concerns. As a result, there is a fear that the supply crunch which was there would not exist going forward, and hence there has been a savage fall in the prices of this stock. One would be advised to go ahead and exercise extreme caution while dealing with this stock at present. Now, the next stock on the list is Kolte Patil Developers Limited, which is available at 299.80 and the face value for this stock is 10. The symbol for this company is KOLTEPATIL. Now, Kolte Patil Developers Limited is a real estate company. The company is primarily engaged in the business of construction of residential, commercial, information technology parks along with renting of immovable properties and providing project management services for managing and developing real estate projects. The company has developed and constructed approximately 50 projects including residential complexes, commercial complexes and IT parks covering a saleable area of over 12 million square feet across Pune and Bengaluru. Now, the 1-year chart would reveal that this company was on a consolidation mode for the first few months of the year, then had a huge spike, but of late it has literally been flat. The market cap of the company is 2,272.93 crores, which means that the company is a mid-cap one. The EPS is 14.12, which again translates into a very cheap price to earnings ratio of 21.23 when compared with the industry price to earnings ratio of 35.86. The book value for the stock is 105.21, which again means that this company is available at a reasonable price to book ratio of 2.85. The dividend yield provided by the company is 0.53, whereas the promoter holding is a very strong factor for this stock and stands at 74.51. The 52-week high for the company stands at 404.80, whereas the 52-week low for the company is 131.10. Now friends, with the introduction of RERA, a lot of small real estate developers are having problems staying afloat and a lot of their business would likely flow to these larger players. Kolte Patil developers and other larger real estate developers would benefit as a result. Now the next company on the list is also a real estate company, and the stock is Suntech Realty Limited. The common minimum price for this stock is 425.15 and the face value for this company is 1. The symbol for this stock is SUNTECK. Now Suntech Realty Limited is a real estate development company. The company is primarily engaged in the business of real estate development and incidental services. The company is engaged in real estate activities with own or leased property, and its business focus is on designing, developing and managing residential and commercial properties. It is focused on city-centric developments spread out across the Mumbai metropolitan region. Now the one-year chart would reveal that this company was on an uptrend for the major part of the year, but in the recent market correction, the stock has been consolidating. Now friends, any stock which does not correct severely with the market and shows signs of strength by outperforming is generally a stock to look out for. The market cap of the company is 6,220.58 crores, which means that the company is a mid-cap one. The EPS is 14.68, which translates into a price to earnings ratio of 29.00, which again is much cheaper compared with the industry PE of 35.86. The book value for the company is 142.5625, which again translates into a reasonable price to book ratio of 2.9822. The dividend yield provided with the company is 0.35, whereas the promoter holding here is above average at 66.75. The 52-week high for the company stands at 470, whereas the 52-week low is 215.15. Now friends, as we said with Kolte Patil developers, this company would also stand to be a beneficiary going forward. Now the next stock on the list is KRBL Limited, which is available at rupees 448.40 and the face value for this stock is 1. The symbol for this company is KRBL. Now KRBL Limited is an India-based basmati rice processing company. The company is engaged in seed development, contact farming, procurement of paddy, storage, processing, packaging, branding and marketing of basmati rice. The company's operating segments include agri, which includes agricultural commodities such as rice, furfural seed, bran and bran oil among others, and energy, which includes power generation from wind turbine, husk-based power plant and solar power plant. Now the one-year chart would show that this company was on a beautiful uptrend till about the half of the year, but in the recent market correction, this has had a huge fall. The market cap of the company is 10,554.88 crores, which means that the company is a mid-cap one. The EPS is 19.62, which again translates into a reasonable price to earnings ratio of 22.85, which is much cheaper when compared with the industry PE of 27.17. The book value here is 99.13, which translates into a price to book ratio of 4.52, which is a bit on the higher side. The company has a debt to equity of 0.5461, whereas the return on equity is decent at 0.2071. The dividend yield provided with the company is 0.47%, whereas the promoter holding is above average for this company at 58.81. The 52-week high for the company stands at 675, whereas the 52-week low is 371.15. Now this company has a huge business in Iran, and that business is in doubt after Mr. Trump revoking America's deal with Iran. Now the final company on the list, and which is again a new entry to his portfolio, is Healthcare Global Enterprises Limited. Now this stock is available at 309.80 and the face value for the stock is 10. The symbol for this company is ACG. Now Healthcare Global Enterprises Limited is engaged in managing cancer hospitals, cancer centers and medical diagnostic services, including scientific testing and consultancy services in the pharmaceutical and medical sector. The company is involved in the retail sale of pharmaceuticals, medical and orthopedic goods and toilet articles. It operates cancer care networks under the ACG brand. It operates infertility treatment clinics, providing assisted reproductive services under the brand Milan. Under the Triesta brand, it provides clinical reference laboratory services with specialization in oncology, including molecular diagnostic services and genomic testing. Now the one-year chart would show that this company has been on a very slow uptrend. The The market cap of the company is 2720.48 crores, which means that the company is a mid-cap one. The EPS is 2.73, translating into a very expensive price to earnings ratio of 113.48, which is much more expensive compared with the industry PE of 54.64. The book value is 63.11, which again translates into an expensive price to book ratio of 4.91. The company did not pay out any dividends, and the promoter holding is on the lower side at 24.04. The 52-week high for the company stands at 353.80, whereas the 52-week low is at 230. Now friends, please don't treat any of the stocks that we discussed in this video to be recommendations on our part. Please go ahead and do your own research, and always consult your financial advisor prior to acting on any of the information that you ever see on this channel. Also friends, if you are benefited by the content on this channel, please don't forget to share these videos, because this helps us reach more people and in turn motivates us to produce better content for you in the future. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.